Everyone, take your seats, please. Welcome. Good afternoon. I'd like to start by recognizing that we are on the unceded territories of the Cowichan, Malahat, Stubasset, Halalt, Penelakut, Staminas, Liaxin, Paquachin, Dididat, and Pachidat nations who have taken care of these lands for thousands of years. We're very grateful for their stewardship. I want to take a moment. There's something I'm actually very excited to share. Some really good news about the continuing education of one of our most important employees, Ms. Allison Boyd, our Deputy Corporate Officer. So our organization is highly committed to the learning and growth and development of our staff and everyone around this table. And we know that we can only have a high-performing team and continue to provide quality service to the community when we're building our capacity and knowledge. So Allison has demonstrated her commitment to this important goal, and we congratulate her on the recent award of a Certificate in Local Government Statutory Administration by the Government of British Columbia's Board of Examiners.
Wow.
So this certificate is granted to the public servants who have successfully completed core courses and work experience requirements that ensure our corporate officers have a solid foundation to support us in the field of local government, and obviously to keep people like me on track, and that so we all do things the right way. We would be completely lost without people like her. So I'm here to present this beautiful certificate I got in the mail and have a proper handshake. And I think there's a photo op.
You didn't tell me about this part. Nice. No speech. Thank you.
Thank you, everyone, for indulging me in that. Okay, we come to the approval of our agenda, but Ms. Boyd is going to guide us a little bit in our steps today.
Thank you, Chair, and thank you for that warm opening. We do have the agenda before us as presented. However, as we do have the auditors present and the closed item is pertaining to them, what we would like to propose is that after SR1, we will go into closed, take care of that business, and then reopen with SR2. And I'll let that be the board's decision.
Moved by Director Morrison, seconded by Director Wilson. All those in favor? Any opposed? Motion carries. Moving to public input. Do we have members of the, no? Okay. Anyone online? Nope. No? Okay, an easy day. That brings us to staff reports. Ms. Boyd.
Thank you, Chair. We are SR1, report from the Finance Division regarding the 2024 CVRD financial statements and audit results.
Hello, Ms. Bowen.
Hello, everybody. So we're back up again with the CVRD financial statements, and Lenora Lee from KPMG is going to do the audit findings report for you. Okay.
Welcome back, Ms. Lee.
Thank you.
Thank you for being here.
Thanks for having me here. So the format of this report is quite similar to the hospital district. I'll probably do a lighter touch on common areas, but just note that they are consistent between the two entities. Similarly, in terms of audit status, we are substantially complete our audit. The only matters that are outstanding now are review and acceptance of the financial statements by the board. And at that time, we'll exchange the representation letter from management with our independent auditor's report. As drafted, the audit opinion is a clean and unqualified audit report, which indicates that there's no material errors in the financial statements and that they do present fairly in accordance with public sector accounting standards, which are the accounting rules that the CVRD is required to follow. The purpose of the audit findings report is to highlight some areas of focus as well as the outcomes of those areas of focus. We start with a discussion around materiality. Materiality provides us with guidance around scoping of our audit work, as well as what we refer to as an audit misstatement posting threshold or an error tolerance threshold. You'll see it's quite similar year over year. We base our materiality off of total expenses, which year over year have been increasing moderately, and as a result, materiality has increased as well. 2.1 million, or 2.89% of revenues, was the quantitative materiality established for the year, and that resulted in a posting threshold of 105,000. If there were audit differences noted less than that value, they would not be included within this report, and greater than that value, we would recommend for adjustment in the financial statements. This page here just speaks to our risk assessment process. You'll see the 4 key streams of financial transactions that we've noted in the financial statements related to revenue and deferred revenue, capital, cash investments, debt, and lastly, expenses, procurement, and payables. Each of those streams of transactions are fairly predictable and routine by the organization, and as a result, our risk assessment over the risk of a material error is low. The first risk management override of controls is a required risk assessed as significant every year, as well as a risk of fraud. There's nothing specific that CVRD is doing to result in that level of assessment as significant or a fraud risk, but it is embedded into our audit standards, and we have to address this annually. This page speaks to some of the procedures we perform, similar to as discussed in the hospital district. We review and look at entries recorded in and around year end. We understand any significant unusual transactions that are recorded to determine what the nature of them are and if that is consistent with our understanding of the business. And we look at entries that may have, for example, unusual account combinations, revenue without cash, or expenses also without payment. In these areas, we have not noted any issues to bring to your attention. A couple of the other areas of focus we just touch on briefly. The first is government transfers and deferred revenue. In this area, we look to things such as what are the restrictions attached to revenue that's been received by the regional district. A few examples of government transfers received during the year would be, for example, the gas tax monies that CVRD receives annually. Last year, the Growing Communities Fund was received as revenue non-recurring into fiscal 2024. The Island Corridor Grant was a source of revenue in the current year, and an item like the Climate Action Grant, which was advanced over in a 3-year amount, that has specific restrictions attached to how the money is meant to be spent, so it's recorded as deferred revenue on receipt. So for a sample of these types of government transfer transactions, we evaluate the timing of the transaction, whether it should be recorded as revenue when received or if it should go first into deferred revenue and matched against eligible expenses. And we also look to the amount and the timing of revenue recognition. Over other areas, we perform procedures such as year-over-year trend analysis, as well as looking at specific transactions like amenity payments to, again, understand timing, amount, and nature. The next area relates to capital assets. There are generally annually a significant volume of capital projects in progress and a material amount of spend. This year, about $17.6 million spent on capital asset purchases as well as donations of capital assets. In this area, we review capital asset additions on a sample basis. We review the amounts paid, any contractual agreements as to assets purchased, such as over land, and we review things such as amortization expense or the write-down of assets over their useful life. In this area, we noted a couple recommended adjustments as well as a few that are uncorrected. The first adjustment related to a donation. So donation revenue was recognized of $800,000, and that was the differential on the land purchase between the amount of cash paid and there was a donation portion because the fair value of that land was less than what the CVRD paid for it. So there is some revenue or some benefit that CVRD receives by not having to pay the fair market value over that land purchase. The second related to mostly classification. There were certain capital assets that were placed in use during the year. However, they still remained in work in progress. And so there was an adjustment to move those assets into in use and start amortization in 2024. The transfer amount was 2.7 million. The amortization was much less, fairly small, just because it was the first year they were placed in use. There's one uncorrected difference in this area. It's the same as last year, so not a new difference. You'll recall last year there was a new accounting standard introduced related to asset retirement obligations. So this required an earlier recognition of decommissioning liabilities to be recognized as assets are in use. The common example here that was recognized last year was over asbestos, over remediation of dams to close them, of wells to close them. So in this area, there's still a few assets that a more precise estimate of the closure cost is required. And until such time that management has a more precise number, that remains as a expected adjustment in the future, but relates to prior years. It's a non-cash item at this point, so it really just grosses up your assets and your liabilities and has no impact on cash. In terms of other areas, cash investments, debt, again, here we confirm mostly these values with third parties and ensure that they're recorded in the same amount. Consistent with previous years, there are amounts related to MFA debt that are not recognized on these financial statements, primarily related to the debt reserve fund. So when MFA holds their 1% in trust in case of default, they report those funds. They're not currently reported in the CVRD's financial statements. So again, nothing that you necessarily have access to because you can't use that cash, but technically it is your asset and would be recognized on the financial statements. And then lastly, expenses, procurement, and payables. We perform procedures here such as review against budget as well as prior year. Staffing is the largest expense area, and we review things such as headcount changes as well as the increase in the collective agreement to compare our expectation to actual. No issues or adjustments were noted in that area. The last accounting topic I thought I'd mention is related to revenue. This is a new accounting standard that it was implemented in 2024. It impacts a very small amount of revenue because most revenue transactions are covered by a different accounting standard. So this one was really a catch-all over anything that's not covered in government transfers, in investment income, in taxes. The premise behind this standard is that it's similar to government transfers. CVRD should be recognizing revenue in line with its performance obligations or what it needs to do in order to earn revenue. So the common area of interest here or impact is related to things such as permit revenue. For certain building permits, there may be multiple inspection points, and as a result, CVRD needs to do certain things at each of those inspection points. As a result, revenue recognition should be timed or matched with when those activities occur. Currently, all of this revenue is recorded at the time of cash receipt. So there is some additional work management will do in the upcoming year to determine how much of the amount collected should actually be in deferred revenue. We don't expect it to be a material amount, but this is a manual process because the status of each permit is tracked manually and needs to be kind of reviewed one by one and a process implemented in order for that information to be a little bit more accessible to record a year-end entry. In terms of uncorrected audit adjustments, I think I have noted each of these. So the first two relate to what I discussed around MFA debt reserve funds, that there's some understatement of amounts there. Again, pretty small amounts. They don't really affect any decision-making and are primarily financial statement presentation items. The estimated understatement of asset retirement obligations, the current estimate management's working with is about $595,000, but again, need to do more work to refine what that is. You'll see the leftmost column, statement of operations, it has a zero impact on surplus, so it's not impacting your revenues or expenses, but would be an impact on assets and liabilities. And then lastly, the adoption of this new revenue standard, estimating the proportion of permit revenue or other revenue sources that should be deferred. $636,000 is the total permit revenue for the year. So certainly not all of that should be deferred at the end of the year. But as mentioned, management will go through a process to determine how much is deferred annually. And then again, no new information on this page here, just the two items that were adjusted. The donation portion of the land purchase resulted in an increase in revenue and increase in land of $800,000. And the presentation changed to move $2.7 million of capital assets from work in progress into in use. There's no significant or material control deficiencies that we've noted as part of the audit process, and we have issued our annual management letter that identifies any other areas of interest. The appendices, I won't go through in a lot of detail. There's one accounting standard that has been approved but will not be in effect until 2027. The last few years have been very busy from an accounting perspective for organizations that are needing to implement standards for asset retirement obligations, for revenue standards. So there's a bit of a reprieve for a couple years, which is welcome news to be able to focus a little bit more on day-to-day operations. And we'll work with management in advance of 2027 to be prepared for that new change. Lastly, just wanted to thank the finance team for all of their assistance in the audit process. We received very timely support and support for all of the questions that we asked, and were able to complete the audit very efficiently this year. So definitely want to express our appreciation to the team. Happy to address any questions.
Thank you very much for the presentation. So looking for questions, I have Director Wilson first on the list.
Thank you, Chair, and thank you very much for the presentation. Risk assessment. There was significant risk of fraud identified in one of the pages there. And is that risk from internal or external sources?
It would be internal.
Internal only.
Yes.
And as carrying on from that one, this oversight that you've identified here, or rather this that you've identified, is there an interim check on this throughout the year by other management within here, or is it only when you do your audits once a year?
It would be throughout the year by management. Management has their own internal control processes to, for example, reconcile all the bank accounts, review journal entries posted during the year. So ours is in addition to that.
Excellent. And there was a page also, other procedures performed. I think the first page, is it possible to bring that up? There was a paragraph there that struck a note with me.
Can you bring up the presentation? Yeah, thanks. Thank you.
You got a print out of that, didn't you? Have you got a print out of everything? The one that they just gave. Oh, yeah, I do. First page, go back. Oh,
Page 11
and
or 12.
there. Go back one page, please. And back one page again. Sorry about this. I'll tell you what, I'll see if I can find it. Carry on with the other people in the meeting. There it is, right.
Okay, Director Morrison.
Don't press the button. I was listening to your presentation in regards to your note on the asset retirement obligations and a desire to have a more precise number for that. And I'm just curious if that, let's just say audits are a heck of a lot different now than they were when I was first exposed to them. And this seems to be very fine detail, and I would wonder if something like this asset retirement obligation and a requirement for more precise numbers, unless I'm misunderstanding, I'm thinking that the effort that goes into getting that more preciseness in this is kind of, I don't know, flies in the face of the law of diminishing returns, because municipal inflation is so high that any number that we determine today is not going to be accurate 6 months or a year from now. So I'm not suggesting that the accounting standards are making more unnecessary work, but what's the applicability of something like that to an organization like us?
Yeah, there's definitely a degree of estimation related to a very long-term retirement obligation. There's some projection forward. There's an estimate of when you're actually going to incur the cost and then discounting it back. So all of that certainly is built into an estimate. The benefit to a regional district may be that the more precise number you have, it could help you with reserve planning. So if you know you need to, incur $700,000 in the future, that could help with planning similar to your landfill liabilities, to either set aside that money or have a discussion as to how those costs will be funded in the future.
Good. Okay, Director Martman, we'll go to you first.
Thank you. That was quick. I was waiting. Thank you for this. And sometimes I think of financial reporting as looking at a patient, looking for signs and symptoms. But I'm wondering if you can report on sort of the general health relative to last year of this patient? Thank you.
Sure. Some of the symptoms that you could think of would be areas like the magnitude and type of adjustments that are recommended by the auditors, any internal control observations, as well as general support and timeliness. So in terms of volume and type of adjustments, I'd say for an organization of this size, it's fairly low. You could see earlier that, there was one item that impacted surplus, and it's not a usual transaction in terms of a land purchase donation. So that does not indicate a systemic issue or a systemic problem within the organization in terms of quality of financial reporting. Timeliness, I think we're probably here a week or two earlier than in previous years. So we were able to complete everything a little bit quicker, a little bit faster. Management takes full ownership of preparation of the financial statements and was able to produce those on a very timely basis. So I would say in general improvements, and consistency with both the finance team and the audit team also helps with just historical knowledge of the types of transactions and type of work to be done.
Yep, go ahead.
And I guess a follow-up question would be, at what point do we switch auditors? Is there a requirement within the auditing profession?
Sure. So currently in Canada, there's no requirement to either change audit firms or change audit partners. With public companies that have listed shares, in Canada, it's a 7-year audit partner rotation requirement. But for an organization like yours, no requirement on either.
Thank you. Director Wilson, back to you.
Oh, thank you very much. Yeah, that's the page there. And this is under other cash investments and debt. Response and findings is consistent with previous years. We noted that the actual accrual earnings, MFA debt. Do we have, this is kind of one or the other, earnings on MFA debt? We don't have any MFA debt, do we?
Yes.
We do.
Yes.
But we've got earnings on it.
Yes. So, in as simplest way as I can describe it, when you borrow from MFA, there's an annual principal payment or a sinking fund contribution, and that money earns interest because MFA doesn't settle the debt until, let's say, 20 years later.
Okay.
So rather than CVRD having to pay the full amount in 20 years, you pay 1/20th each year,
Okay.
and you earn interest on your installment payment.
Oh,
If usually it's between 3 to 5% that you would earn on that installment payment, and that's what this interest refers to.
so if I've got this right, if we borrow 20 million from MFA, and in the first year we only take $1 million, we pay the interest on the $1 million, but we earn interest on the 19 million?
No.
What a shame. Okay, it's worth a try, right? It's worth a try. Oh, yeah, it's worth a try. And so, okay, the last, the last question is there. Management considers the impact not material and would consider these adjustments in future years as new debt is obtained. That was the bit that I couldn't quite understand. Thank you very much. Thank you.
Any more questions? Oh, Director Nicholson.
Thank you. I'm not sure what my question is really, but I noticed in Appendix 5, you have, under Thought Leadership and Insights, there's a section on generative AI. And I'm wondering what local governments like regional districts should be thinking about in this area, because it hasn't crossed my mind yet.
I'd say at this point, it's a journey. So many regional districts are in the education phase on what is Gen AI and what can it do, and is it worth an investment? What are the benefits compared to the costs and risks? So some of the early stage automation items that we have seen would be, for example, perhaps scanning an invoice and using character recognition to automatically input that into a payable subledger. Where the time saving comes from is manual entry by an individual, potentially higher risk of error. So that's kind of I'd say probably where many organizations are right now. Gen AI could be things such as preparation of your annual report, using Gen AI to gather the contents of that to, again, result in potentially more efficient preparation and drawing from common sources. It will never replace human review, but just a couple areas where we've been seeing in our local government clients as to areas they're exploring, at the same time as understanding the risks attached to those things.
Thank you. Seeing no more questions, I'll go to Ms. Boyd to read the recommendations.
Thank you, Chair. That the audit findings report for the year ended December 31st, 2024, prepared by KPMG for April 30th, 2025 board meeting be received, and that the Cowichan Valley Regional District's 2024 financial statements as presented be approved.
Is there someone that'd like to move that? Moved by Director Morrison, seconded by Director Douglas. Any discussion? I'll call the question. All those in favor? Any opposed? Motions carry. Thank you very much. Ms. Boyd.
Thank you, Chair. As noted at the approval of the agenda, we'll be going into closed. So a motion that the meeting be closed into the public in accordance with the Community Charter, Part 4, Division 3, Section 90, subsections as noted in accordance with each agenda item. CSM 1, closed session regular board minutes of April 9th, 2025. CSC 1, objectives, measures, and progress report discussions with the local government officers and employees for the purposes of preparing the annual report. Section 91I. L. I.
It's okay. Moved by Director Morrison, seconded by Director Nicholson. All those in favor? Any opposed? We're going into closed. What do people online have to do, Ms. Boyd?